Hey Charlie, we just started the recording, so you're like you could smell it. So thanks for coming, everybody, again. Always grateful to have you all around and do these sessions with me. Business as usual, I would say. Hit your questions into the chat that are ready coming out of your gut about whatever. Doesn't matter what it is, beginner question, advanced, expert question. Um, And otherwise, I have some stuff prepared from the questions that were coming in throughout the weeks and from other chats. Would be really nice if you could stop using the soundboard because it's super irritating while talking. What was I about to say? Yeah. Anyways, just hit some questions into the chat. Otherwise, I will just go about some stuff that I have prepared. I will start sharing on my screen now. That was one wrong, I guess. Trading views here. Okay. So then maximize this and full screen.
Blue, if you're talking, your mic's muted.
Hello? You hear me? Oh, yeah, I was muted. Sorry. I don't know when it muted, but I basically said, welcome everybody for coming. And if you have any questions, hit them into the chat. As always, business as usual. I've prepared some stuff collected throughout the week and from chats and so on. And would be appreciated if you could not spam the soundboard stuff because it's super irritating. Okay, yeah, now I get it because you couldn't hear me and then it seemed like I wasn't there. Whatever. Okay. So yeah, hit some questions in the chat. Otherwise, I will go through some stuff that I've prepared. I can give like general Bitcoin overview at the moment, which drives everything anyways. And yeah, and then let's see what we're gonna make out of all of this. Thanks for coming. Always grateful to have all you guys coming, taking your time, having those questions and doing these sessions with me. Helps me explaining stuff and getting better at it, helps other people for educational reasons. And obviously also helps yourself. So don't be shy. You can speak up. You can interrupt me anytime. If you don't understand something that I'm just explaining, just cut me off and take your voice or write it in chat. If you don't want to speak up, just do as you like and feel. And then we go through, over everything. Yeah, I got a lot of lines on my actual trading and daily overview chart. You know, all those lines, they're coming from all the way over here, from daily, weekly. It's like a lot of lines. But they mean something, you know. Could have taken many shorts coming from this persistent stack of resistance. Like at least 5 already. 1, 2, 3, 4, 5. Okay, until you guys wrote something out, I will just then immediately start with the questions. We will minimize the chat now so the screen is more visible. So bear with me if I don't see your questions immediately. Otherwise, feel free, to speak up, as I said. So, for example, Heavy D asked using FIB levels for entries and targets. Also, there were like many questions going for the same base idea of things, which is when do you take them, and how to actually properly approach it. So there's obviously always like a contextual thing to every receipt, but in a general sense, I can show you what are the more likely setups which have a better risk return, which FIBs don't have a very good risk return for the different reasons and so on. So I will just do that right now. It's my lovely Bitcoin chart. Let's check if this is in use. No, not really. Remove the alerts. So for the question which FIB targets are more likely or FIB trades are more likely and which are not, probably should clarify first what are those FIB trades, to start with the super beginner stuff. So the basic idea is every time, you can watch the live session 16 also, where I explained it heavily in detail and got a lot of good feedback, so I can recommend rewatching this. But I will quickly rerun it anyways, to pick everybody up and align everybody. So let's close the watch list. We have more space. So what is a FIB trade? Generally, if you have a candle that goes into one direction, like this one here as an example, is a distribution candle, and is then completely engulfed his body. I mean, that's a very large engulfment, but nonetheless, it is one. Can zoom in a bit. If a distribution candle gets followed by a candle that closes an accumulation, and the body of the engulfing wick, which is this one, engulfs the whole body of the prior candle, then this will create a so-called FIB trade. And what you do is you use the FIB retracement tool, hit the lower end of the candle that is engulfed, and start drawing it from the lower wick to the upper part of the body. And what this does, it will create an entry and an exit, where the entry is one line here, and the exit is 1.618 line on the Fibonacci drawing tool. And this works both ways. So this is a bullish engulfment. So you would basically hit the entry here, have the exit here. It's not a super large move, obviously, because this candle is super tiny here, but nonetheless, it is a trade, And in the opposite direction, you would have right to your left also an example. So here you have an accumulation candle, and its whole body engulfed by a distribution candle followed, and then you inversely draw on the upper wick of the accumulation candle to the bottom end of the body, the FIB tool. Now, by the way, that's with my settings. In the last session, there was somebody telling me that it's working inversely I have the setting reverse activated here. That's why I can draw it from wick to body. I guess you are kind of used from Sin's videos, so let me remove it from Sin's videos that he usually goes from body to wick. The outcome is the same. It's just the way how you draw it and where you start your drawing. So in this case, I would, when I delete it again, start from the body to the wick high. With my settings, it's just inverse for my personal convenience, how I use it. You can easily see if you got it right, if the lines of the FIB retracement tool go into the direction of the trade you're actually trying to draw, right? So if I would change back those settings now, then you can see already if I'm looking for a short here, how can the exit be above the thing and go in this direction if I'm looking for a short here, you know? So, but that's also a good example that almost immediately played out a couple of candles later, but here is the trade created, and it gets only created when this candle closes. So it does not work if the candle is still running, right? A good example is like over here already. This candle does not engulf this distribution candle, but it may do it. And it can do it even intra-candle, go up here. It has 32 minutes still left on the timer. So it can easily go up here. And it looks like it would create a trade, but it only counts when the candle is closed, because when it goes up here and then eventually closes back under and closes like where it is right now, or anywhere, even if it's ever so slightly and you zoom in and it would close here, that's not a FIB trade created, and this would not create a long. But if it closes anywhere up here, or doesn't matter where, just that the body of this candle is larger than this, and then this would create one. So, and for this example here, you can already see very well how much the algos are only tapping those entries and not even minding to go above those things. So this will create a hold level, so-called. And these hold levels are entries, and the exits of this trades, in this case a short, entering here, and the exit will be here, will be again the general 1.618 line. Yeah, you could have shorted lower. Obviously it went lower, but the backtesting and the general rule and the success rate has only the proving for the fact that it hits the entry eventually. Yeah, maybe it could have gone a bit deeper, and then it will hit the exit eventually. And in this case, it's a relatively good setup for multiple reasons. First of all, it created a full range, which means there were two candles going into this direction. So this pair of candles create the trade, but the fact that there was another candle going into the direction of the trade that it just created a full range. So also the context is always important, at least most of the time. If we speak about risk management, risk reward and everything, there was already like a decent run up, right? So the expectation to have some form of reversal here, and then you get an engulfment, has a very decent chance of actually then happening when the entry already hits. So, I mean, you can see how it played out immediately. Yes, you got a super crazy pump afterwards. And if you entered here, you only got a break-even exit just today. I mean, not super sad, but if you're like super risk averse and didn't want to sustain such pump, then you would most likely have just entered here and exited here, and that's your scalp that was created. So generally, I would not perfectly recommend to trade the setup for beginners immediately because there's like a better approach to things when we talk about general FIB trades, because usually you want to wait for the price to create a so-called backside trade here anywhere, and then take those trades on the front side, which is then when the price, what it looks like it is doing, starts to roll over a bit. Now it falls a bit into the support area of here. But if it falls over, it would unwrap a bit lower. And it is already starting to form a front side, but it definitely already has created a backside. So what are like backside and front sides? Well, it always depends on the time frame, first of all, where you're at. If I'm on the 1 hour, or let's make it 4 hour for the sake of the example, you have, for example, when the price was just going up here, then it's just creating the front side here. And when it falls over, this turns into the back side and runs through a front side here. So you're basically trading the trades that are in here. You will wait for them to fall back into those prices. So probably longs on this front side here. So the trades are created here on the back side. And you take those trades at the front side. And same goes inverse. So if this is completed and you see it starting to make a reversal, then what do you know? This is again a backside to this front side here. And that's what price always does, right? It has basically only literally 3 realistic states, which is up, down, sideways. So backsides and front sides are constantly flip-flopping after sideways is over. Okay, yeah, it can then keep pushing up, but then you would only have to scroll more to the left and you probably find a different kind of backside to the just creating front side, which brings me then back to the time frames, because if I go to the daily, there's not a whole lot of backside and front side within here. So if you were looking for daily trades, there's basically none from all this little V shape here. There was absolutely one here over. So bear with me. I know it might be a bit confusing, backside, front side, because the hardest part is to understand when do they really start, and they obviously start at lower time frames and then start to bleed into higher time frames from the left to the right. So if you would have seen this backside be left behind here while it was going sideways here, and then it starts pushing higher into the next front side here. Let me remove those drawings. Then obviously when the backside was going down before, then the front side will have to go up. So what do? You check which shorts were created here, which is in this case only really one, where a candle here, this candle here, can zoom in a bit more that it's easier to see. This candle here got engulfed by this candle here. And as you can see, the price never went back to the entry here until it actually did this pump here. So it created this hold level. Let me call it like that. And it created a short. So all you have to do is basically wait for the price to hit this. And if you're not super degening leverage, then you will actually get your exit eventually. Yeah, it pumped a little bit through, but didn't even take a whole day until it visited the exit. So, and if I zoom in into this candle here, because it's a daily, it could have happened that, no, sorry, it could not happen because otherwise the wick would show up here. So forget it. So it hit the entry here, went through it, and then came down later. Even went lower, but for this rule set doesn't matter. It's just about the entry at the hold level and the exit at the 1.618 fib level, and that's all your scalp. So, and now it gets more interesting because that shows you how important every time frame is. If I go to the weekly, you will practically see none of the trades you've just seen. So there's only one short here, which was created. So again, sorry if I'm speeding. We have an accumulation candle here. Yeah, the body is super tiny and it's a doji candle, and makes sense to check on other price feeds if this is also an accumulation closure there, or if all the price feeds are 50-50 ambiguous, then I would not take a risk on it usually. But yeah, let's suggest that it was a correct yellow or accumulation closure on every feed, or most feeds, and then this whole tiny body got engulfed by the next weekly. So this creates a short from, you draw it like this, from the upper wick to the lower end of the body. And what do you know, it even took the trade basically twice. It's only valid once, but in this case it would have worked twice. I would not risk to take the same hold that already hit and met its exit. I would not take the same trade twice for yeah, when I would explain it to somebody else. You can do that sometimes, like, you know, when the price keeps bouncing like this, jing jing, you can take 4 times the same long, or inversely. Probably a lot of you guys have seen it a lot on lower time frames, but as a general rule, it's not advisable because each hold level is only valid once. As soon as it hit the entry and the exit, then the trade is off the table, and you should not take it for granted. So, but as you can see, the daily and 4-hour trades that I've shown before are not even showing up here. But all of those time frames are relevant, and all of those time frames, yeah, are fractal to each other, which means they affect each other and they create trades. And as you can probably see, there's a weekly here. I don't know if that exit hit before the entry. We could check that. That's a very good example because only this order matters. So as you can see, here's a short. So this accumulation candle, its body got fully engulfed by this body, by this distribution candle, and it obviously hit this entry already, and at some point it has hit the exit. But just by looking at how it is, we cannot know if it happened in that order, because only that order matters to hit the entry and then the exit. If we zoom in now and check on a lower time frame, if it happened in that order, then fair enough, then the trade is already off the table, and yeah, you can take it off your list, or reminders, or order books, whatever, or open orders, I mean. So if I use the keyboard with the right and left arrows on my keyboard, then I can draw this fib here, like I explained before, for a short. And if I then just push twice right twice, then it will move the fib tool to the perfect height of the candle. Is where it's the earliest moment where this trade can happen, because you need again these 2 candles to close to create the trade. So the earliest candle can only be the first candle after those. So if I leave it here and switch to a lower time frame, like the 1 hour. Oh, that's pretty interesting. It got like shut up to this entry. No, just a second. Oh, that's very close. Yeah, it happened actually. Yeah, no, fair enough. It happened practically immediately to hit the trade on the open. And then a couple of hours later come back to the exit. So yeah, if you don't over leverage those, then as a rule of thumb, you will get your exit sooner rather than later. So just don't be degening or play small positions or whatever. Low leverage, low position size while learning anyways. So yeah, that was an example for the weekly. And one more time for the backside and frontside thing. The more you zoom in, the more of those swings you will obviously have, because there are much more swings on the 15-minute than on the 1 hour, 4 hour daily, and then not to speak of the weekly. And they are technically all perfectly valid. So if this front side is just running while it is going down, and then the price reverts and it turns into a backside and runs into this front side here, then they are also left behind shorts again, right? So if the price goes up, you're looking for shorts. If the price goes down, if the price goes down, you're looking for longs. So good example would be here, not really. To not only talk about shorts. Yeah, there's nothing left behind, but as an idea of how it would work. So while this is running up and then trend reverse, this turns into the backside, and while the price is running down in the front side, you would look for the longs that are incomplete here and that got created to enter then when it's coming down here, because it's just safer. Yeah, there are trades that are created and then immediately work out. Good example is like here. So if we zoom in a bit more, we have a distribution candle here. Oh, we have both examples in this exact same place. Very good. So let's start with the bad trade first. There's an accumulation candle here. It gets completely engulfed by this distribution candle. It will create a short. And yes, it has hit the entry and the exit, but we don't know just by looking at it if it did that in that order. Nonetheless, it's very risky because as you hopefully remember from earlier, it didn't even create a full range of 2 candles going to the same direction. So this is just one candle. And also, yeah, you're basically trying to short in the lows. It's just for the context. It's coming all the way over here, just basically sideways with this little fake pumps. And on the first 15-minute short, you try to short back into the lows again. So high risk, low reward. And what do you know? It gets pumped away. Yeah, it comes back down later, but maybe you cannot know that immediately and it would have just stayed up here. And then you're stuck into a bottom end short that was high risk. But immediately after, so again, the same candle, this distribution candle here, gets fully engulfed by this accumulation candle. So it will create a long that goes from the lower end of the candle, including the wick, to the upper end of the body. So it will create a hold here, which is one line. And this is the entry, and the exit will be the 1 point, let me zoom, 1.618 line. And as you can see, the entry has hit, and then price immediately flipped back up. So if you're a bit more advanced and experienced, then this was a perfectly fine trade, because it also was for context, and that's where more and more of the framework and understanding gets into your head and gets to you, and with exercising and sitting on top of the charts, understanding which trades are in favor for you to work out and which are not. Technically, at that moment, you would have maybe not taken it if you're a super beginner, because you're trying to trade the same front side that it's just creating. So let's assume you're here while the price travels up. Then you're trying to trade the same run up within itself. And yes, you can do that, as I said, and it was also valid. But if the question is for less riskier and more high probability trades and so on and so forth, and something that's more understandable, hopefully, then you would at best wait for one side to be created and then trade it on the other side, as long as those trades are not done yet. In this case, it was a pretty good trade. Just for your understanding, why was it a good trade? Yet again, we were coming from the lows. It was all just sideways. They were obviously trying to get a bit of speed in here, otherwise they wouldn't have engulfed it. You even have two consecutive candles that go into the same direction. So the trade is created here. And you get another candle that goes into the same direction. So it creates a full range of favoring your trade. And also, you are just breaking out of this slump of sideways here, of this little valley. And it happened with force and everything. So just by the looks at it, at that moment in time, that was more or less just a very obvious retest of the breakout. So if we take the replay tool and not know what happens after, either way, after breaking out of this and doing this hard closure of this candle here. So this candle here was very powerful. Not only did it create the range of two consecutive accumulation candles to tell you that this long is okay to take, but it also hard closed the resistance from over here. So the break level on the, if I zoom in, I will probably find that on the 5 minute. So I will draw it anyways on the 15, even if it's not super valid. So these are not valid on the 15 minute, but as I said, when I zoom in on the 5 minute, they will sit here. This one is the one on the 50 minute. So this candle here is the first candle that hard closed all those break levels, which legitimizes the breakout even further. So when the price was coming back, all it did here was a very high conviction retest of not only the breakout and the hard closure of the break levels, but also from the hold level of this long that just got created. So if you understand more of the nuances and exercise it more, then that was a pretty decent scalp to just take. Probably if it was running live and it happened relatively fast, then it was probably just dip and immediately back up, because then all the algos that went short over here and here and here got their market order executed, and as soon as price hits here, then they all said like, yeah, ciao, I'm quitting my position, and then that pushes price back up immediately. So yeah, that's how this example works. But yeah, I can only repeat, stick to the more simpler things, which is trying to trade a price that's created here with all the trades that are in there. Try to trade it when it comes back here, then comes back here, and then comes back here, for an example, to take those trades instead, rather than trying to be a hero and chase price if you're just starting out and if you're just learning. Again, yet super valid trade. I didn't take it because I didn't see it until I'm just explaining it now. But yeah, well, you know, price ran even higher after. So obviously it was a fine trade. So what else there to explain? Very important. Don't trade the hold levels that got already used. Also, same area, same example. If I put the hold level here. So the hold level is nothing else but the end of the body that got engulfed both directions, and that represents the entry. So that's what you call a hold level. In this case, it was a long. But if you take like this one here, this accumulation candle got engulfed with this distribution, creates a hold level, creates a short, and this is also a hold level. But what I'm trying to say is, now that this trade already hit its entry and its exit, you are not supposed to take it again. And as you can see, it smashed through it. In this case, it's very violent, and I can guarantee you there are cases where this would have held another time, especially with the support that's coming from this prior resistance. So you have a whole bunch of stuff, but they went through it with force, and you would have been right to follow the basics of of not taking a completed FIB trade. And this FIB trade got completed already because it got activated here and completed here. So yeah, it's like the most perfect spot to almost explain every single rule at the same time, which is rare. Usually have to look for 2 or 3 examples. But yeah, very awesome. Water sipping. My throat has a frog today. Okay, let me check the chat for any follow-up questions. I hope you're not all too confused. Probably most of you heard this stuff plenty of times already. I like it anyways to repeat, to remind about those rules, and also to get the beginners aligned. So what do we get here? Yeah, chat, I agree. I find my my FIB drawing direction more intuitive because I'm drawing into the direction that the FIB is expanding, and was yeah, I mean, it's just preference, right? But it was super counterintuitive to me to draw into this direction, and then it opens up in the other direction, the other way around. So yeah. And also, if I draw this, I'm looking for a long, and a long is supposed to go up, and so I'm drawing it like this. And same as inverse for shorts. If I draw it down, and I'm looking for a short, and that entry is here, and the exit is right below. So, but yeah, do it as you wish. Are these also on YouTube? Libby. Yeah, we upload them every week. Every session is recorded. Check out the, I wrote it one more time here, events channel with all the summaries. for the sessions since I started doing summaries. I mean, the first 12 sessions or so were a bit more done by Sin.C and also just flexing freestyle, hanging around in chat. But eventually we said, yeah, why not do it like a regular thing, do it weekly, record it properly, name it, upload it, and summarize it. So yeah, that's when we started doing it, and I could give him a hand there and take over, so he doesn't have to do everything, you know. So on the events channel, you can see a summary of the probably last 10 live streams, and uploads are found in, what do you know, live stream uploads, and those will direct you to our secondary channel of the FibLab, where we exclusively upload the live sessions. And yeah, so you can't hear me, Apone? Can everybody else hear me all right? Or is my voice fucked up again? Ah, you can now. Okay, cool. User error, yeah. You are your own best customer, right? For your marketing. Yeah, the live streams need a pause button. That's why I record them, chat. Sorry for your phone call, but you gotta stay tuned, you know. You cannot have any calls or any private obligations while in the live session. Just kidding. But yeah, that's why I record them, then you can come back to it. Okay, seems like there were no questions to the just explained basics of this. Otherwise, again, shoot them in chat. Or if you have a aftermath thought later, no worries. So these are the basic rules. I explained it more extensively in the live session 16. I probably talked about it like for 2 hours. There are more nuances to it. Things as we had a 1 hour example that I was watching. Didn't want to explain it immediately to overcomplicate it. So like the traits just spoken about are so-called 1 versus 1 traits, because one candle, this one, gets engulfed by one other candle, this one. But what do you know? There are more traits, more and more traits everywhere. So let me delete this. Let me write this again. So this was a 1 versus 1. Oh, that's a very shy V. Whatever. But there are also 2 versus 2, 3 versus 3, which means we have 2 candles in the same direction. And then 2 candles unbroken consecutively into the opposite direction. So these 4 candles will also create a short. And how is that? So this is a 2 versus 2. Not so easy to draw with this thing, to write useful things. Okay. And this is the same rule. Why is it the same rule? I can show you. And I love the tool for this. I have a template extra for this explanation. If I squeeze those 2 candles in both directions together, blue, click, then what can you see? You can see a single candle body engulfed by another single candle body completely. and that translates simply on the 1 hour. That translates to a 2-hour trade. But the kicker is here, because super obvious question would be, yeah, then why do I need to look at the 1 hour for a 2v2 trade if I can just use the 2-hour time frame? Because the 2-hour time frame is simply 2 1-hour candles, right? Yeah, in this case, it does show up, which is fair enough, but those higher time frame candles do not always have their open at the same moment as the lower time frame candles. So we could probably find an example that is similar. How about this one here? We have 2 accumulation candles here, 2 distribution candles here. So if I go here and there's no, so this is a 1-hour time frame, and if I go on the same place on the 2-hour time frame and there's no engulfment, in this case it is again, okay, fair enough. Do we have another one? Yeah, opposite direction, 2 candles in distribution followed by 2 candles in accumulation. That creates a long. By the way, super high risk for super obvious reasons. It's like, what the fuck, trying to long this? Yes, it is a valid trade, and yes, eventually Bitcoin will probably execute it if it hasn't done it already. No, it didn't. But you're not trying to keep longing into such an overbought territory, right? At least you would want to let it cool down and maybe keep it in the back of your mind. It hit the entry already, but it will take some time to hit the exit. So nonetheless, so 2 1-hour candles, 2 1-hour candles, go to the 2-hour time frame, and now you see what I mean. There's no 2-hour candle going down and 2-hour candle going up that would show you the long. It does only show up on the 1-hour time frame in this case, because the anchors and the rollovers of those different time frames do not match to show up. So this is why it makes sense to, I would not call it super expert, because eventually, or all that much expert knowledge, because eventually you train your eye to see those things. It's not that I'm looking for this. I just see the candles and then I see those trades. And the more you exercise and the more you're used to looking at the charts for those things, the much more easier will it for you to just spot those things. I mean, this one here, this long here is super obvious that it is there. But I know for sure people that when they are starting out, they still would have to look, okay, where is this trade, right? So fair enough. So just for explanatory reasons, bit more advanced stuff for one versus ones, or then 2 versus 2, and then 3 versus 3. But just so you know, they are there, and I explained them a bit deeper in the 16th live session. And I don't want to overuse the time of this session to explain the completely identical things. Unless you guys don't have any questions and I can just ramble on and on and on, then I will just talk about whatever I feel. Yeah, even pick, I will address that immediately after. Just bear with me, because the most important thing to all those basics that has not been explained, and that's why I want to refer again to that other session. Sorry if it's annoying to repeat it or hear it, but you want to be aware of the trends that are in the way of your trades. So if, do we have a good example? Isn't maybe. Let me draw out that 1 hour quickly without explaining anything, just to get it up and running. I don't know, this one was fine. Where I was squeezing into this trend, so. But this candle wasn't there yet, so one more time. That's where the trade was created. That's where the trade moved. The trend moved. Yeah, for that moment in time. So this trade got created here and entered here. And it was probably not the greatest risk to try to short beyond the trend line. Not a good example because price was relatively flat. Maybe we do have one over here to have it sorted. I don't see one here. Maybe this one. No, not a good example. They worked like a charm altogether so far. Either way, so the base idea is if you have a trend of whatever steepness, so this is a downtrend, and if you would find a long inside here where the exit sits like, where's my drawing tool? Where the exit sits like here, then you would not like to take it usually because you're working against the trend. So if your exit sits under this major downtrend, let's imagine there's whatever trade down here, and yeah, like this little long here didn't hit the entry yet. So if whenever price comes back here and hits this entry, it's a more easier example. So this long here, yeah, it's a tiny scalp, but a lot of tiny scalps, a lot of tiny wins make a lot of money. So yeah, don't need to wait for the ultra big wins if you can make more of those throughout the day. Either way, so this is your currently running major trend, and if we say price will keep falling somehow similar, and eventually it will hit this entry here, then most likely the exit still sits under the major trend, which is the current one. So you can take that. But if it would, that's where it's getting tricky for it being so tiny. Let's take the 2 versus 2. Let's imagine the price walks alongside this trend. Can happen, not super likely, but yeah, sometimes it does. So let's say it walks exactly like this and hits the entry here. Then it might be questionable to take this long because your exit sits beyond that major trend, right? I mean, you see, it can wick through it anyways and then keep closing under it. But just for the sake of the example, usually you don't want to take a long that has an entry where that has an exit beyond the downtrend, and the same goes to the opposite side. So if you have a short and you draw out your chart, and there's a short that you see, then you don't.
Blue, will you draw that out, please, for us? Will you the exact concept that you're going over right now? Will you just draw the fib line and the trend line, and then in the invalidation zone, taking it against trend in both directions, please? And thank you, good sir.
Yeah, let me do it for the long side. I don't find a good example here because it was like just so, yeah, was just going up. So there were not a lot of shorts that were against the trend. So I'm trying to find an example here, but I don't see a good one. So let me try to find one that would have been a bad short. Yeah, maybe this is the closest as it can get still. So this is our uptrend. You take the lowest distribution candle for the first anchor, hit the very next distribution candle that you could find, and put the anchor on it, and then you can see how this is already the uptrend, the self-fulling until it gets moved over here, because this candle does a full hard closure. But at
I'm going to
that
pause you
point,
here for just a quick, super simple moment.
sure.
I have been, and I erroneously perhaps, I have been taking your first uptrend anchor, and each time I draw one, for whichever reason this is, I've always anchored them, or for some reason have in my mind that they should be anchored on, for the uptrends, the first in a range of accumulation candles. And in the case of the downtrend, the first in the range of distribution candles. Excuse me, the other way around.
Yeah,
So,
I
like in
guess
this case, there's a
that's
1, 2, 3, 4, 5, 6, 7 candle range of blues, and you're anchoring the beginning of that at the very last candle. It is the lowest candle, right? But then there's also a candle 3 before that that's also very low as well. Could you just clear up for the official stance that it's the lowest distribution candle in the range?
It's the lowest wick of that candle that is in the same consecutive sequence of identical candles in the same direction. So
It does
since,
not matter where it is within that range.
yeah,
It's the lowest wick.
yeah, exactly. But because I can show you, which is probably better to understand than why that is. Stay, leave. I don't know. I want to stay generally, but I want to redraw. TradingView asking the hard questions here.
Mhm.
Start new. This one sounds good. So let's go here. So no, it's always in hindsight. It's like yeah, obviously this was the uptrend, right? But how is it created? So if as price happens, right, eventually it gets here. Then can I slow down the speed because usually it just jumps away when I press play. So we go super slow. Okay, this is very super slow. Okay, so now we have, let this next candle close. Okay, this was a bit too fast, but bear with me. Let's say this, can I go back just a bit? Okay, so as far as I understand the replay tool, this candle just closed and it is about to open the next one. So when you're drawing this out, you would do this, right? This is your lowest price point in the same sequence of consecutive distribution candles, which are more than one, so 2 plus. You usually don't draw from one like this because it's just a single candle. So you have 1, 2, 3, 4, 5 already. So it's more than one. It's 2 plus. This is the lowest price. You would draw it like this, right? Because you take the lowest price point in that sequence. You put your first anchor on, and this is your first next candle that is just time-wise after your first anchor. So when you found your first anchor, you just go blindly to the right. Then no other rule really applies for your first hit for the second anchor. So your first hit of the second anchor is this first next candle, which is then here. And does that make sense? Or
So far, I'm on the same page so far.
okay, then let me
But
continue.
a break in the direction of candle needs to be where you would hit the second anchor ultimately.
Yeah, bear with me.
Sure.
Then you will see. So now now it gets interesting, right? Because we have a hard closure under this uptrend, which will move the trend. And what do you know? You understandable, right, from all the other explanations, or I can explain it again.
Very
It's not
understandable. But
okay.
since we're drilling down to the granular minutia, this could have, where it is on the screen right now, been an uptrend?
This could have been an uptrend as long as, and you will find many examples in the charts where you get an accumulation candle back inside, then a distribution candle back below, then up again, up again, up again, up again, up again. And yeah, what do you know? Then in hindsight, you would have said, oh yeah, that was the uptrend.
Okay, so then that conceptually is a huge help for me because I would have not thought that the uptrend could have been created without a up candle, without a accumulation candle. I thought that there's a hard rule that that range needed to be broken by a candle in the opposite direction.
No, as soon as this candle closed, it already created an uptrend because yeah, what do you know? You were able to anchor your first anchor onto something lower and your second anchor on something higher, which creates just by the angle.
Rationally, my brain makes sense to my brain, but I'm just trying. There's
Yeah.
a few hard rules that I'm trying to assimilate. And
Hey, no worries.
retain.
Keep asking.
Yeah.
It's important because sometimes I don't see the tree for the forest, right? And I just say something,
Yeah, for
draw
sure.
it, and everybody gets left behind and has these question marks in their eyes and head. So this is your uptrend. Then this candle does a hard closure. So by the super basic rules, a hard closure will move the second anchor of the trend that you are drawing to that next lower wick. So it will move here. But
Yeah.
what do we have now? Is that an uptrend? No, that's a downtrend,
Nope.
right? It's below 90 degree. It's below, and if you're not sure, it's now you know because it goes infinitely to the right. But if it's super tight and you're not sure, then you can use the horizontal tool, and then it will tell you the 90 degree. And now you know this is not an uptrend anymore. This is a downtrend. So what does that do? That will do that the major anchor, so the first one will move over to this one. So we don't have another distribution candle yet, but we already know that this is at the moment in play. It can first stay here because we don't have more distribution candles, and it could, yeah, technically it could have gone up non-stop, and then yeah, that's too bad you don't catch every trade, but we already know that didn't happen. So let's keep just press the play button until we have more candles. So accumulation closure. Oh, that looks good. Keep going, keep going. Zack. Okay, now, hey, stop. Stop it. Okay, did another candle, whatever. Let's go back one more, select bar, this one here. Let's not speed this. So now, you know, this is not an uptrend. You know you can move the anchor, that this candle is your main anchor now. And this hits the first anchor, and then again, you just go from the first anchor blindly, one candle after the other to the right. So accumulation candle cannot be the uptrend, cannot be the uptrend. Distribution candle will be able to draw an uptrend. And then you do this. And that's how you get to the fact that this is your first
That
candle.
addresses the question entirely. Perfect.
Good. So then let's keep speed in at least a bit for what happened afterwards. It swept the trend. Then as soon as this one closed, it pumped massively. Maintains the uptrend still. Maintains the uptrend. Nothing even tested. Hits trend first time. So first trend taps are usually very profitable and very easy to trade. So, and now it gets interesting again. Because now wait, there's one more candle after I press stop. That's not nice of you, TradingView. So, complicated situation. Initially, I was trying to look for bad trades that are working against your trend. In this case, it's kind of both at the same time. It sounds maybe a bit weird, but it is to blame that the entry is so close to the trend line anyways, that if, let's go one candle further. So talking about a short and a bad short generally. So this closure here creates again a short, a fib trade. Pull the tool, plug it onto the wick and the body to show you the entry and the exit. The entry is simply, as always, the engulfed body, and and the exit will be shown to you by the fib tool. So the general idea would be that it's not super great to take this short because the uptrend that is in play will work against you, against your chances of it completing. We know already it did complete, but this would be, on the one hand, not a good trade. But as I said, it gets a bit more complicated in this very specific case because I cannot find a better example because all those candles just did play out like picture perfect all the time. The next candle is opening under the downtrend. So it's at the same time retesting if it wants to lose the trend, and it's also hitting the hold. So now you're in conflict to guess, okay, is the price trolling me and it wants to fake out the breakdown and that happens a lot of times, and then just do this, whoop, and trap all those shorts that did exactly that, take this hold, take the retest of the downtrend, of the uptrend, and then the next candle just pumps massively away and then just does this. And the more you look on charts and exercise it again, you will find those traps. But at the same time, it was also valid because it was basically losing the uptrend, retest, hold, and yeah, we already know that the next candle basically did it. Would probably have to zoom in really to see it, but it hit the entry, went a bit above, came back, hit the exit, but then also only ever so slightly, right? You can see it was not even $10 on Bitcoin. It's like a fraction of whatever it could have been. You missed it due to liquidity issues if you would have taken it. So not a great short, but at the same time they trapped a lot of shorts here because for them it was like, okay, we have a hold, we have a losing uptrend and a backside retest. But as soon as this candle closed and did trap all those shorts, what do you know? It is a hard closure and a hard closing candle. So the trend gets moved again. And that's how you get the magic, right? As soon as this candle closed, the whole picture changes for the algos, and they use this actually as support and bam, bounce off of it. So if you weren't super quick, super high conviction, bam, entry, bam, exit, and ciao, bye bye, but were like, oh yeah, I enter here somewhere and then I see how far it goes into the exit, and maybe they do a partial take profit or let it run for a bit. You wouldn't have had any time to do those decisions because it hit the entry, the exit, and then pang, went up immediately. So good example of a bad short to not take because it was working against the major uptrend. I mean, major is always relative to the time frame you're working on at the moment because the major uptrend is obviously down when we go to the monthly.
This is the part blue that's really eluding my comprehension. To create and establish in my own framework that already exists, how time frames relevance corresponds to the trades that I want to take. and utilizing or creating, perhaps even developing a structure that's just if then what's.
Yeah.
So this 1 day time frame shows me these trends, which means I have quote unquote bias maybe, right?
Yeah.
And then as I start to drill down and I find smaller opportunities that may have trends that give room for longs or shorts, inevitably there will be a larger time frame. And within the context of last week's live stream, I have made a fucking rat's nest of a chart, drawing lines everywhere on it.
Yeah.
You've inspired me to do a lot of exercise, and I've been practicing quite a bit drawing manual lines on charts. And I can find justification to not enter any trades based on all the lines on the chart now. And analysis paralysis is starting to set in, and I'm unable to kind of see through the forest to see the tree, so to speak. That makes me utilize a system where I go, okay, 1 day, 4 hour, 1 hour, 15 minute, whatever that looks like, which ones to sort of obey and trust, and which other ones to kind of discard and say this validates this trade idea. Let's go see how it works.
Yeah, I get it. I mean, you can see it on my main chart, right? It's full of shit, and I don't use it really for super scalping things. It's more like an overall picture. Where's the trend? Where are all the trends going for our daily, weekly? Where are the major resistance levels congesting from? Yeah, all the time frames, weekly and daily. Basically, I just draw out. I could take also 2 day, 5 day, but then I just have more lines. I have some 4 hour levels here to get a general sense, but I would not do a 15-minute scalp here, right? Because usually then just take a cleaner chart, you draw out your local trend, just like we did, always depends on what you're doing. So everything that happened here was perfectly all right if you had almost no daily lines, no weekly lines, no 4 hour lines. You were just scalping like the 1 hour chart. But it doesn't hurt to have at least some degree of reference. So if you're scalping the 1 hour or 50-minute or 30-minute or 144-minute is also very profitable. I read many times. Then you would at least try
ask you and just interrupt you so many times here. I have no idea what your agenda is for this live stream and if there's content that you want to get to. However, I heard you just say if you're scalping the 1 hour, would you be as kind as possible to say here's a 1 hour that I would scalp. Here's the criteria that I look for. Here's what I reference it against. Are there other time frames? What would a 1 hour scalp look like for you? If you were in this chart in the 1 hour right now and you said, all right, and you just kind of greedily rubbed your hands together and you said, I'm going to take a 1 hour scalp right now. What does blue do?
So this long here obviously was one because it was coming from the context of accumulating sideways in the lows. Then it starts pumping and engulfing, and then as soon as this one here got created, I would have longed this, I mean, I have a long running from low 90K, so 9,200 is my average. So I started a bit earlier already, just the position general. But if I was just about to scalp it and not talking main positions, then this is a long, you break up, you get the retest, and then you immediately get your exit. And then same down here. So this tiny one, it accumulates again in the same range. I mean, you can literally see it, right? It's in a super support accumulation range, then gets a fake pump, and then starts basically the whole story again. It creates a distribution candle. It creates a trend. It creates an engulfment here, which creates a long. And then immediately on the next candle, it hit that hold level here. And that's your long. Yeah, it went much further, and you would have, if you would just follow the system 1-to-1, so full entry, full exit, then you would have missed most of the run, which is why we talk so much in chat about the other levels of the FIB, because people that are more used to this and are more into it already would have probably just taken 50% out of here or 25 take profit and then put their stop loss right above the entry and then let it go and take another profit here at the second level, 2.618, then another exit here at 3.618, and then the last full TP, or I don't know, you have 90% taken out here. The less run is a moon bag for gamble or feel good or whatever, and that's how you can actually do it, because that would mean it would have played out the full range of this FIB trade. The back testing, and that's I cannot insist that too much. The back testing only gives you the guarantees of the entry at the hold level and the exit at the 1.618 that they will happen while the chart gets created and prints.
But I mean,
candles.
2.618 TP2 is like historically, it's like almost it's like a little bit over 60% hitting as well, isn't it? It's a pretty high. TP2 is a very high likelihood of being hit as well, isn't it?
But I'm not so much interested in explaining to beginners a 60% hit rate while it's already confusing enough, So
no doubt.
I cannot stress enough how important it is to know that the backtesting for over 99% success rate is this tiny scalp here. And if you take out 50% here and let the rest run, or put your stop loss a little bit lower to give you breathing room, you don't always have to have your stop loss at the entry. It's just if you lock in profits and don't want to give anything away, then your entry is obviously your stop loss after hitting the first exit. But it's also fair enough that if you enter here on this one, now it gets hard to draw with the magnet tool, sorry. If you enter here on the hold and then you hit the exit here, then you can inverse like for 50%, that would move your break even just about here. And if your account, your risk appetite, your style of trading, whatever, allows you to put your stop loss in here, which would take you a tiny total loss, but gives you a lot more breathing room to this trade because it also sits beyond the trend, sits far below the hold level, sits deep into the candle that we're already sweeping, and so on and so forth. Then you can do that, but it's also perfectly fine to say, no, I take some money here and I give nothing back and put my break even here, my stop loss here at the entry, and then let the gods of the price movement decide if they give me nothing more or if they just keep running and hit second TP, third TP, fourth TP over here. And what is the next trade here I would have taken? So and
if it's a scalp for an hour, that particular distribution candle with the hold level that we were just using as the example,
this one here?
There's the one that we were just on. That one down there.
Yeah.
In a short trade like that, sure, letting the things ride, and for newbies that may be listening as well, there's multiple entries and multiple scaled entries at the 0, the 0.5, and the 1.0. But getting a drawdown underneath the trend line to hope for a 0.5, that activation candle didn't cross into the 0.5, and the likelihood of that was pretty low, right? When we draw the fib on that anyway. So like it's maybe like a 0.76 maybe, So you would have, if you were trying to scale into that, you would have missed the majority of your layering for only one entry at the 1.0. And in the scalp, quote unquote, sort of style, you kind of would want to deploy your full trade position at that 1.0 and then take either your full position or a high proportion of that at the 1.618, right? Entry and exit, sure shots. Are there circumstances in that scalp where you would layer on something on such a slow or on such a low time frame?
I did exactly that. That's why my entry is so low, right? It's hitting.
Is that like 0?
Yeah, it sits just about at the 0 line because I've seen this pump and dump and then fall only back into the accumulation here. I mean, it was like a super obvious, like slowly trending up, higher lows, sideways throughout the weekend. Scam pump, scam dump after to take out all the longs and then actually do its run. So I'm a fan of layering anyways. I'm not a big
Yeah.
fan of full position at hold. It's far too risky. As you can see, even that example,
So
the
risky.
candle did run through the hold a bit more, so you could have gotten a better entry. And how to find them is simply just scaling, zooming in into lower time frames. So I'm pretty sure we will find some 5 or 15 minute down the line here. So let's do this.
Before you move the
just
time
right
frame real
now.
quick, will you just
Yeah.
draw the fib on that? And
Yeah.
then do your little trick of hitting it over one arrow so we know where the activations are. Perfect. For anyone else listening, that's a little special that's been absurdly helpful for me. Draw the fib, hit the arrow twice.
Yeah, it is absurdly helpful, right? That's why I keep repeating it.
Oh god, it's truly a game changer.
Yeah, it's as simple as it is easy, right? So
Yeah.
Yeah, it went pretty quick there to take all the stop losses, right? Because everybody was getting itchy too long here, and then they said like, okay, let's take out all of them and then run. That's that's a perfect example why I personally never play really with stop losses around my entry. But yeah, I would also not really super recommend it for beginners. So
Yeah,
I'll just
stop loss
say,
for sure for beginners. For
yeah,
sure.
yeah. So how did it head now? So that's where it gave
This is
you
where it
barely a minute
activates.
or two to actually take that entry, and it barely went into the entry just by $50-$60. So
Yeah.
you could optimize it, but that difference for Bitcoin in that specific instance while running above the trend anyways, not super smart to try min-maxing this entry when your outcome result would be an improvement of not even 0.1%, right? Or 0.08. So
I guess that was my speculation as to what your preference would have been. I know you like to layer in, but on something, if we were going to take a quick scalp and we saw the opportunity arise, I was wondering if a justification to just full position size on that 1.0 is something that you consider or do occasionally.
I mean, this one here would be a potentially okayish circumstance to have layered in when it was happening.
Yeah, that's short.
Yeah. Let me draw out this one quick. So if I start from here, I have this one. That's a full hard closure, so the trend moves. So I restart it from here. And yeah. So this is the hold level, right? So this is your entry, technically.
You got all kinds of 0.5 or more on that one, though.
And I like to wait for those if it's a single engulfment candle like this. So let's rewind a bit more because it's always this hindsight versus how do I do it when it's happening thing.
Yeah.
So
When you said you like to wait a little bit more on 1v1s like that, like to me, this would be, and maybe you can help edify this for me, but this would be a high risk 1v1, yeah?
yes.
Okay.
Yes, it would have been, but then also context. If we go back to what we've just drawn out, this was your trend. It got hard closed. It gets moved here, and what do you know? It gets rejected on the same level. It gets rejected on this break level. It generally, there's probably more over here. So there was a good chance that price will come back down just another time. So you would just follow the rules of if you draw more stuff out, more context out, and you think, yeah, I got this engulfment. Chances for another scam pump, this being the second pump, just being a scam pump, is decent. We don't have a trend yet here. I get another candle printed. So let's wait for this closure. Whoops. No, not one candle by the other. This one closes here, so this will create a downtrend, actually, the local one. What was this? Full line. And then you get your next candle, and whoops.
So this is the activation of that engulf right there.
So this creates a second downtrend. If you would have found a lower time frame, potentially inside this one here, then you could have already shorted right at the downtrend, or you wait until this closure happens and also creates a downtrend in the 1 hour. And can I just show one more candle? Is that possible? Ah, yeah, that's how it is done. Just builds it slowly. So yeah, this one was a bit more tricky because it was opening on the top side of this trend. But if I zoom in, I would have probably already shorted it. Where's the anchor? Yeah, shorted it either here or here. And then it went a bit further. Fair enough. But yeah, there's like no super risk-free trade. You need to have a direction in mind to take any trade.
Yeah.
If you're just taking any fib blindly, then that's not advisable anyways. But like starting the short here, so you can see the anchor of the 1 hour candle is here and it goes until here. So that's where that 1 hour candle closes from that anchor, where the downtrend is. So you got this new candle on the fresh 1 hour. It goes down, it goes up again, hits the downtrend, and then it goes through it. So entering here was fine, and then probably try to find something refined over here. Didn't quite get to the break level, but generally was running into all of this resistance. So layering into this one here, if you're not full position here, and add a bit more here to up your average to get any exit. To me, fair enough, because the idea was you got this 1 hour engulfment. It was high risk, but it was also after a larger run up. So the context again is important. Yes, it could have just kept running. That's not what happened. That's how you can come to the conclusion of how to short this. On the other hand is the rest of the context, if you are doing like this microscopic drawing here, fair enough, you probably have a better chance to get out in the short. But if you have something like this over here, where you are like in the super oversold lows on the 4 hour, on the daily, on the weekly, and I am not seeing the exact same example. Okay, like this one here, you have a short created here, That's just stupid trying to short this, right? After all this fall down, you can try after this short is created, and then it hits the entry over here. Yeah, it did even hit the exit, but just taking the trade on itself is just not super smart after what has happened prior. So context, context is important. So generally, this was an okay short. Fair enough if you didn't take it. If you wouldn't take it, it was also high risk due to the single engulfment. But after running low on steam here, then slowly bleeding only up into it again, it was also perfectly fine with the hump over here already and a break level over here. Then it will probably at least fall a bit further down into the support here so that you get your exit. And it's, in the end, you're also just looking for your exit. It doesn't mean that you're making a Lambo trade for it to die very far. Or you
a Lambo trade. Oh, that's rich. That's the first time I've heard that one. That's good.
all you wanted was this next candle, right? And you were sweating from your entry here or here somewhere because of a 5-minute or 50-minute candle that went a bit further. And then you take the L and then it actually happens, and yeah, better to take a tiny L and not liquidate your account for sure. But if you also never give your trades any breathing room, and this is why I hate stop losses nearby entry, that makes only sense if you do like large position, large leverage sizing. As a rule of thumb, and why I don't like stop losses myself, as I said, would not recommend it to beginners. You should have at least some idea where you say, okay, I'm out, I'm taking, I don't know, depends on your account size, but let's say, okay, I rather lose $100 and restart somewhere for the next trade rather than trying to risk $2,000, $5,000 or whatever. Fair enough. But usually your stop losses get hunted, and for a solid stop loss, for my definition, a solid stop loss for me personally would sit so far away that the loss is already so high that it is questionable why I took the entry at that place and not at the stop loss. For stop loss, okay, what do I mean by this? For a stop loss of the just said short, that was probably to take here with the zoomed in information from the 5-minute earlier. For the stop loss to be useful for me, I would probably have to put it up above here, above this, this magnitude, either above here or even above here. And then your drawdown on your short is already like 2.5%, and then you escape the range already. And then is the question, why the fuck are you still in that short if your stop loss is out of this mind? So
what do you do?
so
What do you do when you find yourself in that position?
it just doesn't happen to me. I either get my exit, or I double down and then get an early exit, or I just manually decide, okay, something's fishy here. It keeps running against my expectations. It's not following the lines that I am perceiving as that the lines that the price should follow next to justify being in the trade still. So I just manually exit and take whatever loss that is just showing. So I'm not. It's not. So for clarification, just not using a stop loss doesn't mean I'm not exiting trades on a loss. It just means I don't automate my stop loss, because as long as I have conviction that my target will be reached or that I come out in profit, then I will stay in the trade or double down and then get the break-even exit or profitable exit. But if I don't see conviction in what's happening, and it would have, I don't know, started accumulating here sideways, resetting all the lower time frame indicators like 50-minute, 5-minute, and so on, then it would be much more riskier to hold on to such.
When you say resetting
and then it does this,
the lower time frame indicators, can you say more on that?
Yeah, we didn't show RSI yet, but I'm using this a lot for momentum, time, context of where price is sitting. So this is like the base drawing of where lines are supposed to be for clear entries and exits. But for how I support my thesis is in either direction, longs or short, is to use the RSI indicator on top of everything you have basically, which is a momentum indicator, which is oscillating between 0 and 100. And it shows you a self-referential momentum of price over the last X candles in context to the running candle, and oscillates between those. So that's why it can never reach above 100 and or below 0, and actually barely ever gets over 85 or below 20. That's kind of like peak oversold and peak overbought, and it will show you also, and that's also a very good example why this was a super easy short. There was no engulfment or whatever, but it was running into a lot of resistance to the left and was super overbought, which is what this indicator shows. And it will also give you the opportunity to draw trend lines. There are no anchors on this indicator, like on candles with the magnet tool, but trend lines, I would personally say, are even more valid on this indicator than on a lot of price action, for how you can really do some art stuff here, like real art, to find the actual trends for strengths. And this is also like a super easy justification of why the second hump was more easy to short, because you got this engulfment here from all we explained before from the basics. But I can already see that when it got engulfed and rerun back again, that it was losing steam here. So this is basically a bearish divergence, not perfectly because it's almost the same level, but since the momentum is so much lower over here, I already know that the strengths behind the price relative to the price tag is not the same as here. So it's weaker. And as it was rejecting already and engulfing this, then this was pretty easy to short on this end here. I'm kind of certain that this candle, while it was running, just this wick here above, or even this wick here, was at some point probably hitting this trend line. You know, this line that is showing here are the closure prices of the candles. So good example, this wick here is relatively long. So the RSI in between went probably down here and then closed back up, just like the price changes until it locks in. So taking a short here after this trend was established was also like super obvious. And then if you can sustain the heat of a little extra wake up, because that's where everybody is putting then their stop losses to be as close as possible, then that's what the algos will do. They will take the money off the table and then they run the price down. So yeah, for this context, it was for me it's definitely something shortable, even though that the basic rules, and as I would like to explain it to most people from the get-go, is that this was initially high risk to take because you wouldn't have had even a full range deployed of 2 candles, and you are not even trading the backside or front side thing explained earlier, and so on and so forth. But if you dig into the opportunities that are there also on top of everything that's more basic, then that's how I explained to you why it was justifiable to take it. And to your question, where would I personally then decide, okay, my trade is fucked and I cannot justify this short here anymore and it will maybe come much later back to it, is when this momentum would have also broken out at some point here after this trend got established, right? Because this candle here created this peak, and this is the moment where the trend is created on this indicator. And then that's also where you can take the entries, like literally, when price taps this trend line. But what do you know, if it's a running candle that still has 30 minutes on the clock, you have some risk going, and it could have perfectly closed back up here, which would have meant that the price is also higher here. And then usually you wait, or that's how I do it, wait for a second confirmation, so a second closure above a broken trend on this. And if price didn't fell then already below it again, then I would already start to get nervous depending on my position size, on my overall perception of trying to short nearby lows, right? Because context again, accumulation range, right to the right and upwards just a bit. So it was, despite the overall effect that we were expecting upside at some point eventually, and it went sideways first of all for 8 weeks almost. That's how you can fuck yourself over if you're like too ego about a tiny 1 hour scalp and say, yeah, but I want my exit so much. And then that's the moment where actually Bitcoin would have started to do like this, and then you don't get your exit. But would I take full position here? Would I risk my account to liquidate on a fucking short Skype here? Nope. So usually I would have a lot of room to double down where I find it reasonable, or I just take the L as soon as I have no conviction of the setup that I was looking at. 2, 3, 4 candles prior, like this. The decision is made here, right? So the decision is either made here in this candle, as explained before, or on the next candle, also fair enough, at some point. Now, not because you're not shorting support, micro support, and then trying to short it and be late, but at some point up here was a valid short. And then you have to wait to let it play out and observe it, or just go away and wait for your exit to hit if you're convinced. Always depends on so many things. Risk appetite, account size, risk on the table for this specific instance, leverage, how much time do you have? There's no perfect receipt to say, okay, do it always like this and you will always make the money in X amount. That's not fair because there are days you can make more money and there are days you can make less money simply for timing reasons, risk appetite
I would
reasons,
add to that, though,
mental capacity, whatever.
that it is very important to do that, though, to find a system where you say this is high risk. I'm certainly not going to put my full account on this. Then on days where there's less on the table, you say, okay, I'll put 1/10 of my account. That's good risk management for sure.
Yeah.
Find a system, follow it.
Yeah, it's certainly much easier to short something like this here, this hump here, even though you see the hold level got already activated, just like the rerun up to take out all the late shorts, to take a much larger position over here than trying to take over here. So that's again where context is important, right? So you get all this run up, pump, 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 pump. Then you get your initial fall down. Everybody starts shorting. What do you know? They revert the price to take all those late shorts out, and then they let the price fall. But then actually shorting this here, or if you have been in the short already up here for whatever reason, being more high convicted about larger sizes here and be more chilled about this large size is much easier than doing it over here over a stupid 1 hour engulfment that is a single one. So that's why I say, if you want a receipt or a system, then try to learn to add more ideas to your system and add flexibility of contextualized action taking. But if
it's
not,
kind of like in the current price right now. Like you were just highlighting an area, days before this, whereas right now we're just kind of mirroring that same exact section that you showed, where shorts are so blatantly obvious. But then you look at liquidations and all kinds of other stuff, and you go, "Oh, this is
in context,
this is an interesting area to pay close attention to for sure."
Yeah, in context, right? Because if I go into the 4 hour, I see an immediate trend on the RSI here that got established, it got held. Do I really want to risk on such relatively strong uptrending strengths? They fucked around a bit more here, but this is probably valid because intra-candle it tapped those trend lines. So do I want to be overly bold about a 1 hour short here, just as it is approaching the support trend here, and 4 hour definitely overrules 1 hour in regards of strengths. Then you also got your daily trend, which is what is this? Why it is dotted? Okay, so you got your daily trend here on the RSI. So do you really want to risk on a relatively strong uptrend that got built over here to risk again on a 1 hour trade. I mean, I have those contexts in my mind, you know. I'm not zooming in on a 1 hour trying to
Yeah.
scalp it like mad and yeah, I'm gonna be right because that feels good, that it looks good. I got the engulfment and eventually this exit is gonna hit. Yeah, as soon as you start the ego trip is when you make more losses over time, for sure, because you will also have a lot of examples of shorts that are pending that got their entry hit, but never the exit yet, and they will do so when we are approaching the lows again and getting those exits. And if you oversized your short then, or have had no risk management whatsoever, like probably this one, don't need really to zoom in. So this short here between the candles probably fell down first and then hit the entry and then started building support and on these entries, and then what do you know, it ran away, right? And you were still waiting for your exit. So better have a context in your mind, have a plan B in your mind, and don't be too bold about trying to be right, you know, for a single trade, and then keep adding, like doubling down here, double, 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 double. Then that's roulette, right? Eventually you run out of money to double down. Yeah. So as I said, if I don't see conviction in my trade anymore, then I exit, and that can be for different reasons. But they all fall back for justification on the baseline of all those framework-related ideas. It's not super random. It's just eventually you have to make a decision about either your profits or your losses. And if you start adding breathing room and not have like a super flatlined, what did you call it? 0.5 stop loss. So that's probably, where is it? Yeah, just about here. It would have fucked you. It would have taken your stop loss, and then it would have executed your trade. So if you want your breathing room for your trades, then maybe think about taking those entries at your stop loss. That's the best general rule anyways. If for most traders and for most newbies, the entries should be where their stop losses are. It sounds a bit counterintuitive, but the more you get stop loss hit, and if one of you or some of you are listening that get their stop losses hit regularly, then try to think about that expression to put your entry where your stop loss is, and then see how you perform afterwards, because there's usually not that much of a rush. The market tried to paint you a picture of pump fast. Okay, I got a short. Dump fast. Oh, I got a long. Oh, I got a short again. There's a lot of emotion creating in this volatility. You cannot imagine how many people chase this long here. They revert the price, chase short. You know, they take the money from both sides all the time. But if you let the price run and print its candles and draw its trends and draw its holes and everything, and you draw it out, and then you see something, hey, that looks like something high convincing. If you see this and you think, no, I don't have conviction in the short, then don't take it. Fair enough. You don't need to take every trade. I can argue why I would have taken it. As a pawn asked me, do I see a 1 hour short that I would have taken here just as we are looking at it? Yeah, I can explain to you how and why I would have taken it. But that doesn't mean that everybody should try to be a chart hero and then risk all those stop losses and all this money if you don't have the high conviction trade. Because why not wait for more candles, put alerts, wait for more high conviction, like this tiny scalp here. It's not super large, and unfortunately Bitcoin is very unkind for giving those tiny longs. But let's see what happened on this little long over here as the price develops. And waiting for these is nothing but patience, which is most of the time like the key
I
problem.
watched a short from Cotton Candy. It's difficult for me to learn from Cotton Candy, so I've watched his videos so many times, but he's not recently, but created a few shorts where he shows like in sequence on a lower time frame exactly what you're showing right now. Let's see about this long, right? Where price just revisits the hold consecutively. I think it's like 9 times in a row.
Yeah.
And he's like, yeah, he goes, but there's just, you could have longed every one of those and got out of every single one of those.
Yeah, because
but also tons of holds are left behind. Yeah, in an uptrend, why not?
Yeah, that's a matter of fact until the trend reverses. And if you manage to get in 10 wins on all these uptrend hold levels hit following the further uptrend, and you take one loss disciplined at the 11th trade, then yeah, you won 10 times and lost one time. But usually, and that's why price keeps going up, so volatile up and down. What most people do is they have no clue what is happening here. They are super undecided. Also, a lot of cake is baking. Yes, shorts are baking, longs are baking in general. But usually people are price chasers, not price predictors. So they do nothing over here. Volume was probably dead. Oops. Fuck this. EMA. Okay. Yeah, there was like absolutely no volume. But it was also clear that there was an uptrend building from those lows, right? It was just a swing back down into the support over here. Whoop. Then accumulating above it, retesting those things. So it was perfectly fine to take long here, and that's also why I did it, to hedge for my future short that I then entered here. And we're just adding into as we were going higher. So but most people don't do that. They are like, okay, yeah, we go here, we go here. Oh, is this the breakout? Oh no, it was just a sweep. Then they go short here. Then it starts to actually pump. Then they quit their short, start too long. It reverts just a bit. Oh, they start to sweat. Then they exit their position. Then it pumps again. Left leaves all these people behind. Then it gets a mega nuke and all this leverage that was sitting there, and I was sharing practically every day, at least twice in the chat. It finally swept all of this, and then also everybody gets super bullish. Keep longing, does one more pump, and now you got the perfect FOMO because everybody thinks like, okay, it will never stop running ever again. Up only. Crypto Twitter is in full bull mode already. Print all those theories about potential rate cuts, Supreme Court, and maybe Powell will be fired, and what else? They are just bullshitting around. I don't give a fuck, But that's their brain, that's their mindset, and then they start longing here and longing and longing, and until even the last idiot couldn't take it anymore to start along here because they feel like now they got an insight. Now they feel like, okay, you know what? Now we are bullish again. But what the fuck? You're already 15K above the low, and we're just pumping a bit more after the sweep. So
I'm short at 95.5, and part of me is also looking at the possibility that we go up, and I'm just committing to myself no more double downs or no more entries unless we get above 100. But it's so clear on the zoomed out that this is quite clearly going to be coming back down here. Maybe there's a little bit more upside to it, but they're just
exactly.
chasing.
There's so much information in the chart why this will come back down. I can talk for hours about it, But give me a second and let me check the chat first, unless you have an immediate follow-up
I'm just
question.
monopolizing your whole. No, you're good.
No worries. You're asking all the right things. I'm glad that you're speaking up, But okay, now it activated anyways. Hitting the 15 EMA is like the most obvious rejection initially. Doesn't mean it can get higher, but first taps of high conviction lines of whatever kind are like, I don't like 100% wordings, but 99% chances for getting out a profit for the first tap of almost anything major in play. You will get some form of profit, because that's also where all the algos, you always got to think yourself not into that, okay, what is the other guy only doing, or what am I doing, or what is price randomly doing? But what are the algos, the algorithms actually programmed on to act up on? And they are 100%, believe it or not, programmed to first buy the 50 weekly moving average here, drag it a bit more up until it gets sold down, and then when it gets confirmed that the bear market has actually started from October 10th, or what that was, or 6th, and got even more confirmed down here, that then that is not support anymore, but resistance. So they will sell this fucking line. Even if you don't have a trend line or the break level or whatever, that's what they do. They will sell those super major uptrending support lines as much as they bought it here, right? Even if you're a super noob and don't know how to draw all those trend lines and break levels, yeah, following like the most major highest time frame moving averages is certainly possible to account for it. And Solana is also a very good example on the 2-week about it hitting its absolute low. Not the 2-week, the 1 week, the 200-week moving average, that way around. So if you wouldn't have known anything, I mean, the 120 level is not a secret. Between 110 and 120 from all this past 2 years basically is support. So the likelihood of it falling through just was almost zero. But then you also hit like the 200-week moving average. It's like a super no-brainer buy, and that's also where all the algos were keep smashing by. It's not like jumping up immediately, but yeah, every time it tried to go there, it was just bought up, and that's just what they're doing. So yeah, but I'm rambling now. Sorry. Let me check the chat.
It's interesting. I haven't. Chat is like, it's just me and Putin here. But the TR main I haven't turned on for a long time, and I am so baffled at how much useful information averages can provide. But the contextual cues about like that 50 EMA, which I forgot on TR, is that blue line.
Yeah, see,
if you don't
I use
alter,
this a lot. I use this a lot, and I didn't want to overwhelm everybody with my explanation of why that 1 hour engulfment was probably fine. But if I had to guess, the 5-minute at least, if not the 15-minute EMA, got flipped also at that short, and that's also then a very good indication that you are probably on the right side of trying to short it.
Blue, it would be really, really, really helpful if you were to produce a little supplemental pin with those small anecdotes and observations that you've made. What you really just said right now about on the 15-minute EMA, those little things are immensely helpful. And including, I've been using TR since before I met you, but using TR the way you use TR has been helpful for me too. And I just forget it. I keep it always in my indicators, but I never turn it on. And boy, it's helpful. It's very, very helpful. It's just another tool, and I want to keep using it. But it would be great if you were able to put some of those just sayings and those little knowledge bits that you have down on a little cheat sheet, just to add more work for you. Because why not, for your big putty opponent?
Yeah, I even go into the 3-minute when I'm really scalping and then trying to optimize my trades, because the 3-minute also likes to tell you a story. So yeah, it was challenging. The same moment in time that we spoke earlier, where it broke up again, and then you could have doubled down. and used it as support and then fell down. So yeah, as I said, it was a bit more tricky. The moving average didn't follow up as quick as I thought because it was probably too speedy over here. So they weren't as high as I thought without seeing them. But yeah, tricky one, but valid one. So, but if it wasn't for this setup, then there were enough setups where you look for the short. Let's go to the most recent high.
I think you're in the replay tool, just so you know. I don't think you're up to current.
Yeah, it's almost on par. So like this example, right? If I mean it undeniably that we already went very high, pumpy, pumpy, pumpy. Then you get like a double top formation, and then you also start to lose the 5-minute EMA, which is never a good sign. And then you get the next rejection, next rejection, next rejection. It even falls under the 200. And that's then also after those things got lost initially. Yes, they get reclaimed, but the algos are then more, how you say that in English? Then they are more aware that after those things got lost already, that they are most likely looking for more shorts. So if we take the 15-minute, the 50 EMA got also lost, got reclaimed again, and then yeah, you get a super strong selling below again, and then it's just a battle between the 50 EMA and the 200 EMA. That's like a lot of people trade those things. So I like to add it to the conviction of what I have drawn out. So I usually don't start with this. Maybe when I get to my chart and check, okay, where are we? I turn it on, but I would not just take a trade blindly. I would nonetheless take my time and draw this thing out here. Where do we go? Like this. Okay, it's then this. Then this anchor will go here. Man, there was a lot of volatility, almost no accumulation ranges are really created. Okay, so this one is a valid candle over here. Perfect. That's where we can draw a trend from. So, see, you wouldn't even have really needed the TRM. You could just take the extra collection from it, because from the trend that got created here, it kept rejecting against it and then closing back under and then taking shorts latest here. Was already fine, and if I turn it on now, then I can already see like the battle between the breakout, hits the trend line, falls back below it, comes back above, battles it, falls back below, hits the trend line, and you can see how it squeezes actually against it. So that's how you can create yourself a bit more context, but it's a very overwhelming tool and indicator. I would not recommend it to beginners. Stick to, first of all, learn how to draw trend lines. First, learn how to spot fib trades with their hold levels and their entries and exits. Then start drawing break levels. And if you understand those things decently enough, also how to be aware of more time frames, then I would say you can start asking for more tools, like the Fib Atlas here. Oops. I mean, we try to make a compact version of things because I'm not such a big fan of all these swinging lines covering all my space on the chart from the TRM. If I turn this on, I can't really figure out the candles anymore, really. So that's another reason why we developed this the Fib Atlas. Oh, we got an update here. Let's check it out live.
I've been using a really interesting tool lately called Aggregated Trade, and it kind of makes my brain leak out of my ear. But it's all of the exchanges aggregated volume,
Mm-hmm.
and you can custom code it for. I mean, it's yeah, it's crazy. I'll link it to you real quick if you wish.
Yeah, why not? I'm not sure what you're talking about, but we can have a look. So, but for the sake of the explanation, that's why we are building this one here. It's much more slim, but it will show you the same information. And also for me, I feel like it's more readable for, okay, where is price right now in context of those EMAs?
Yeah.
I mean, we are still in development and reviewing this, where to put those labels and everything, but just putting like straight lines, horizontal lines with the price tag right in front of where the price is right now. It's so, to me, it's much more easily readable to see that we will approach support here. And also, and that's where no other indicator could help out. This one here will actually show you cross time frame those information, because as you can see, I'm on the 4 hour here, and it will show me the 1 hour EMA. So what does that mean? If I turn this off and put on Traders Reality Main again, this will show me the 50 EMA of the 4 hour here, but not the 1 hour. I would have to go to the 1 hour and then remind myself where it is sitting. Oh, it lost it, and now it's battling that as resistance. So yeah, since there was no good tool, we said we build it on our own. So when you know price is battling right now and deciding if it wants to maintain this 50 EMA on the 1 hour and use it as rejection and then fall probably to the next support, which is then over here. And then the 4 hour support is here, daily is over here. So yeah. Yeah, you can already see kind of just by this picture how even these EMAs in the context of your trend lines and holds and break levels, etc., are working together or against each other, you know, because you have resistance, weekly resistance of the 50 weekly EMA right here. You know, it hit the very top. This was the long exit and short entry. And now that it is rejecting, it's trying to find support somewhere. Couldn't take the 1 hour as support yet. If it loses the battle sustainably, then eventually it will unwrap to the 4 hour and then see if it starts accumulating on it and travels back up to the weekly, or if it even falls down. So yeah, this thing also shows more the Psi range, the CME gaps, shows a bunch of stuff. Fair value gaps, we got an update there. So let's check if that's Gucci now, because they are also very valuable information. It's still loading, probably overwhelmed by the update. Ah, looking good, looking good. I like that update. So also shows you the fair value gaps. The ones that are filled are a bit more washed out, and the unfilled ones are more solid. And yeah, if you don't know what the fair value gaps are, they are like attractive for price. Like an immediate good example is over here. There was a fair value gap, and this candle did nothing else but hit this one actually, and then price immediately reverted. So if we were to claim that 1 hour EMA on the 50 EMA on the 1 hour, if I had to guess, it will most likely just fill that fair value gap to a certain degree or completely before it then probably starts to roll over again. So yeah, a lot of stuff going on, but I'm rambling again, and I actually did not really check the chat.
No, it's looking good.
But I
I
guess
think it's just me and Chad right now.
Yeah, Chat and Jay Buddha are basically talking with each other. Is that right? When I'm flying over the chat, guys, can you give me a summary of all the rambling you also did there in chat? Is there a question inside, or comment, or topic, chat, and Buddha you wanted to talk about, or is it just the two of you having fun? What did you share there? agri.trade/VBYV. What the fuck is this? Am I going on a virus website?
No, not at all. That tool is oh, man, there's a lot going on in that tool. On the surface it just looks real simple, but you can custom program it to do spot, look at spot CVD versus perp CVD. It'll show you all the volume happening. And then it tracks all 16 of the exchanges that like legit exchanges, so Binance, Coinbase, etc. And if you want one of the templates that I've been kind of messing around with, I'm happy to share that one with you too. But yeah, again, as far as tools go.
Okay. And you can see live positions that are hitting. Somebody took a
Yeah.
1.1 million short on Bitcoin just now, and price went down.
Yeah. Yeah. Well, you can. One of the really interesting things too is you can watch live real time if you put it on the 5-second, for example, right?
Yeah.
You can watch, and it also has these audio dings to it as well. So you know, you can
makes me
see
really
these.
Crazy. More
Yeah,
noise.
they for sure do. If you, yeah.
Like in the casino,
But it
you
is.
can say it. Ding, 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 ding.
That's exactly what it is. You're in like a little. It's pretty bad. It's pretty bad.
Pretty bad. Didn't want
Ching,
to say
ching,
that.
ching, ching, ching. Yeah. But yeah, you mute it, and watching the kind of trade volume for perps versus spot, and then seeing kind of the delta between the two of those. You know, you'll watch Binance in 15 quick transactions do 30K each, and a giant like BTCC will come in for 800,000, and it'll show you the liquidations as well that are happening. Well, not on that particular one right now, but it's a completely like open-ended platform, so you can kind of program it and mess around with it however you want to.
Okay.
Let me see if I can export my theme to you. I'll figure out a way to do that, but yeah, I have it to where perps and spot are side by side, and then I also have these spot versus perps for all the exchanges, so you can kind of see where. I don't know. It's mostly helping me to decide kind of shortly where volume is coming in from, and I've also been using multi-distribution volume profile by Zeilerman. And that's been a little helpful, but it's all, when we're talking about TR main and all these other things, it's all basically revisiting most of the same concepts, just visually kind of presented in a different way.
Yeah.
It's like right now there's Durbit is a $5.4 million perp short. Like,
yeah, just be careful with those information, because you said earlier that you're in decision paralysis analysis, and I can tell you
for sure.
I can give you a heads up. I went through all of this trying to put more arrows into my quiver, but eventually you learn that trying to remove arrows from your quiver will improve actually your trading rather than trying to find
That's
more tools.
exactly where I'm at right now. I'm trying to develop develop just a system.
Yeah, Oldmate and Chat the Chat were asking me plenty of times in the past, last year, how's the order book looking? How's the order book doing? Eventually, you realize it doesn't even matter, So it's just a lot of
Yeah.
noise, and I already knew, despite the fact I already knew that they were highly manipulated, the order books. I still thought I would get extra information and like some form of leverage out of that information, but eventually you understand that if you just leave it away, then you have more time for actual charting, and ignore that and
Yeah, the charting
be
process has
same
been really
good,
fruitful.
be as same as good, because the candles are printing, they will print you this uptrend. They will print you this uptrend, and the order book in the background creating those trends creates those candles. So you actually don't need that extra information, right? So that bounce here on the loose that we discussed earlier. I mean, even if you just took this long at any given point in time, that tiny drawdown even should not make you sweat, and then you would have taken all the upside if you would just position yourself for a general long and not for a fib trade with entry and exit, just for a good old longing support thing. Then you would have come out ahead here. And also, yeah, drawing it from somewhere earlier, it was also just following all the stuff on the 4-hour and daily and weekly. So then there was no order book information. It was just candles printing according to buy orders and sell orders. And that's basically then all you need. I mean, I get it. It's fun. It's gimmicky, but just, yeah, maybe it helps you as a heads up. Don't try to overwhelm yourself with
Couldn't
fancy
agree
tools
more.
that, yeah, provide order book information.
I think tools that maybe help you potentially reduce friction points around the husbandry, maybe, of charting are useful, but not at the cost of being able to do and learn and spot and flex that muscle of doing it yourself. Which is why I found last week's stream very compelling for me to just completely open a new chart, completely change the candle colors for it, get a fresh start, and say, okay, start drawing lines again.
Yeah,
just start drawing lines again. No indicators, no nonsense. And so these questions that I've been asking when I early on and hijacked your live stream.
It's all good, man. Since
Yeah,
nobody
just
else
wanted
is really speaking up.
Yeah, I'm just super American, so it's all good.
Yeah, and here's a good example of, order book information being executed basically against market sell orders and market buy orders is nothing else but volume. And as you can see here on the pre-open of the US, they sold it down with this certain volume. Then they bought it up again with even more volume, but the price couldn't even engulf the prior sell candle. So that's an prime indicator to actually short this, while you also have probably also your trends already in place, right? You already have this. So you get a sell down of this rejection. Okay, you don't want to go short here. You want to wait if it comes back up to enter your short, and that's what everybody did, right? The buying volume up here of some people or algos or whatever did nothing but hit all those sell orders and short entries of the people that did see all of this without any context, without any daily EMAs, 4-hour, weekly, blah, 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 whatever. Just if you have this tiny trend and this information, selling down. So in layman's word, selling down with less assets was easier than buying the same amount, the same height with with more money. If I didn't misspoke that right now. So basically, you sold down easily, but you had a rough time buying price back to the same level because it had more volume, but it couldn't even reach the same height. So that's a short, wide trend line, and it barely got any better than this, So, and that's just order books and market orders against those order books in plain sight, basically. Yeah, but not talking you down. I've been there. So while you learn and try to get this extra edge, those websites look super cool and super fancy, and you already told me you can program it and it's super cool, but I don't know, if you're 2 weeks in and you realize you didn't take any trade improvement from this information, then that's the moment, like you just said, yeah, you're already questioning it, and that's the much better approach to question why you even use that tool in the first place then. Okay, Chad, you had a couple of questions now. Fair value gaps included in the FIB Atlas? Yes, it is. Sin asked if we're going up. Yeah, that's space question every day. Why don't you just include the range trends in the FIB Atlas and then people can turn? I guess range trends, you mean the indicator we're building that's basically drawing trend lines according to the anchor. Man, it's simply for the fact that you don't want to smash everything into one indicator. Also, it's not as easy to maintain for our developer. The indicators are not born, they are just growing on a tree. Actually, somebody has to take care of them, oversight them, understand them themselves, and maintain them and patch them. And then it's also easier for reviewing processes if you can talk about one product and then another product, rather than to have one indicator that has everything and call it the everything indicator. And then what are you going to do, how you maintain this? And despite those organizational and logical division of content and product, I'm not going to lie to you, it has also a monetary effect because the Atlas and the PNR indicator that we are building. So this one here, let me add it again. I don't have it on my fourth tab. No, not favorites, invite only. Oh, not TTP, PNR. Where do we have this one here? I don't have my configs here. So then let me go to my insane chart tab. So
another huge consideration is the weight themselves of the indicator. PineScript has tolerances, and everything slows down. Another consideration why you don't put everything into a single indicator is that there's a weight. Yeah, there's a weight tolerance to what you can fit in one thing and keep it performing.
Yeah, that's, you can see that if you turn on the TRM main first time, or after a certain time, it takes ages to load or doesn't even load sometimes. Yeah. But despite the fact, it's also for customer experience and packaging those things, because the PNR long short, that's one product, it's one principle, a bunch of math behind it that's working together, and you pack it into one thing. And then you have the FIB Atlas, which displays. The FIB Atlas is already kind of our everything container because it contains the Psi range, it contains the CME gaps, it contains those EMAs, it contains the fair value gaps. Oops, now that's the wrong tab again. Third one. So I can show it to you here. It has the CME gaps, it has the Psi range that I'm also using a lot and talking a lot about. It's created on the weekend. It has those EMAs, and you can turn them on and off as you wish and color them as you wish. And it has fair value gaps. So that's the 4 things so far, all packaged in one. And usually there is no indicator that combines those super relevant things. You usually have one for fair value gaps. You have one for the Psi levels, you have one for the CME, and you have one for the EMA, whereas, to be fair, in TR main, Traders Reality main, you have the Psi and the EMAs. But there's also only per time frame the EMAs, and that's not what we wanted to give to you. We want to have one indicator that shows you the relevant EMAs on no matter what time frame you are, because if you zoom in on the 5-minute or 50-minute, then the 1 hour EMA and 4 hour EMA are still relevant. So it makes sense that it is showing it to you. Let me turn off the fair value gaps because it loads very long. So here, right, if you're on the 5-minute, you still want to see the 1 hour EMA, how it is battling it basically. And again, for transparency, I don't want to just sound good for logical and organizational reasons, but also the Atlas and the PNR will be in the cheaper package bundled with also other stuff. It's not only this two. And on this large trend line framework, there's so much more work into those and so much more thought process and backtesting and everything. It's super complicated to actually automate all this trend line drawing, all this hold level drawing, all those break level drawing. So everything I'm explaining in these live sessions like today and every other prior will then be automated per time frame in one click for the most relevant lines and so on. And yeah, that's actually a massive time saver. And for those that want to have it, that's then goes in the more expensive package, to be fair, right? I mean, this one will also include the PNR and Atlas and everything then. But it's so much more work. So no, there's no way we can put it into the FIP Atlas as well. Doesn't make sense to put it there anyways, but yeah, we also split it for that reason into different indicators. So yeah. All right. I don't know. Are there any immediate follow-up questions or new ones? Because otherwise I don't see from my question portfolio, question board, only large topics. What do you know? People want to know about the big questions in life. What is the meaning of life and everything? But I don't feel like we can fit that still into the same session. I would rather postpone the next questions from the pool in front of me to the next one. But if you have anything right now, live in chat, then I'd happily answer anything. Thanks for the kind words, guys. Also, Evil Pig, glad you feel enlightened. Yeah, I am grateful. I'm a very, very happy person on average. Ah, yeah, up or down. The answer is simple, yes and right. So, all right, ladies and gentlemen, thank you very much for coming. Appreciate that you took your time, have all this chatter, all this patience, and yeah, consciousness about my rambling. Looking forward to more sessions. As always, hit stuff into the forum that I prepared here. I mean, it's a mix now. I split it into two for different reasons, but usually questions that are bothering you can go here. Just start a new thread. You can also post pictures there if you have a dedicated question to a chart, or if you have a chart and you say, hey, can I have a live review of my chart? And you can go over it and tell me what is wrong, what is right, what is good, what could be better, etc. Whatever bothers you, if it's base questions, no matter what, just don't hesitate, post it there. Yeah, and otherwise we have this little subsequent chat. It has another purpose where we actually want to pull in questions for dedicated videos. That also Sin will take his time eventually to record those, as we gathered more questions that I didn't cover yet here, or things I don't want to cover because he's much better at certain topics for sure. If not anything, then yeah, I will leave it to him. Things like Skyping and origin definitions and range creations. I have those things in my head, but explaining it to others is different. So these are things I would mostly leave to him for sure. But yeah, that's where you can post stuff. Feel free to do so. Thanks for everybody coming. And yeah, have a nice evening, day, morning, wherever you are. So bye bye. See you next week, same time, same place.